Hello guys, this is Ray from nextforextrade.com. Today is Monday the 5th of August. It's barely Monday, so it's just gone midnight, so this is a position I've taken. So I'm going to jump into this. So this is a position I've taken as a short on the EURCAD. I'm just going to talk through some of the reasons how this could go in favour and some of the reasons it might not. And of course my usual reason for entering this as well. So let's just start on the daily chart. So first of all, we have seen some nice bearish movement in this move here. We've seen some lower highs and lower lows. The reason I've got this horizontal in here is that we did see some resistance where the price has had some trouble in previous weeks getting through this kind of level. So this also interacts with our standard deviation channel, which I have around the price here on the daily chart. So this gives two reasons for why the price could find trouble moving higher, at least, and the downward movement we've seen also gives some context to be short on this. We can see this resistance that I've got here also comes back to previous levels as kind of zonal area here, some zonal support, zonal resistance. So it just adds to the weight that there could be further problems with the price moving higher there. So with that in mind, I do look to the other time frames as well. So looking at the 4 hourly, we can see again, I've just encapsulated this downward move, which is, I think that's the same one on the daily. Yep, same one on the daily, just with more contact points as well. We can see that resistance is even more apparent. And the thing that I did say, I gave some of the things that were good with this and some of the things that were bad. Good thing is on the daily, we've got some bearish movement. 4 hourly echoes daily, same chart effectively, just more contact points. Hourly is the problem on this one, which is why it's not ideal, but there's still enough context for me to take a short on this. What worries me on the daily, if we blow this up, is that we can see this most recent move here has been upwards, providing us with high highs and high lows, and it is still within the standard deviation channel. So I have entered this trade, you can see here, just recently. So I have shorted this already, and it's just a bit of a sticky situation, because it is, I have sold into what is viably supports. We can see that this level here where I've sold at here, there's kind of a zonal support here. It is also at the lower edge of the standard deviation channel. Now a more conservative trade would be waiting for the price to break past these previous higher lows, so for it to break through and pull back. Now the market isn't always going to be doing what I want it to do when I'm available to trade. Now, starting out, I would say wait for those to, for the market to be, all the stars aligned. If you're starting out trading or testing a strategy, don't break the rules too often. Learn the rules first of all, and then interpret the rules for your trading. But with this, even though we've seen this kind of warning sign on the hourly, I'm happy enough with the overall signs that I've seen on the higher time frames, on the hourly, on the daily, on the 4 hourly, as well as the 15-minute here, where we can see that it's making these lower highs and lower lows. Same thing on the 5-minute. So if the price were to break through this support, which is what I'm anticipating, then it would be ideal. That would at least give me further confidence in the price that it could be bearish, and kind of vindicates the entry that I made. Now I've got my entry in here. I haven't got my stop loss and my take profit in place. I'm just going to add those now. So it's for 1% risk that I'm doing on this. So this, in fact, I'm basing that 1% based on a £10,000 account, right? So it is this over the last couple of weeks. I have brought this up to 4.5%, just over 4.5%, but the price or the amount that I'm willing to risk here is just over £100, and there is a whole reason why I'm placing this here. So this is the 15-minute chart that we're looking at here. That's my stop loss in place, and this here is my take profit. And in case you're wondering what I'm looking at, well, how I'm kind of calculating this, I've already calculated out the position size. I know that for me to let's go back to the daily. Firstly, what I want to do based on my daily chart is to have my stop loss based above this area of resistance that we identified, because this is the trouble area. If the price does start to make higher highs and move past this significant resistance that we've identified, then want to be out of the market. So that is the premise for my stop loss. So based on knowing that that's where I want my stop to be, I then decide, right, I need 1% risk, which is roughly well, let's call it £100 risk that I'm willing to have on this trade. So that then entails me having to figure out what is the distance to that stop loss. So that's roughly 60 pips. So from my entry, which was here to where we're going here, it's roughly 60 pips. Yeah. So then that means just dividing the £100 by the 60. I don't think you can see my calculator, but basically if you do 100 divided by, it's in fact, the way this works, you need to do 600 rather than 60, so just add on an additional naught. So if you do that, it comes up to 0.166 recurring. The last thing I need to do, because this account is in pound sterling, I need to figure out what the pound against the CAD is. So because this, you can see the last portion of this is it's EURCAD, CAD, so Canadian dollar. I need to find out what the rate is in the GBP CAD, and then multiply that against 0.16666. Right, so I can see the rate at the moment is 1.6 on the GB CAD, so I need to multiply that out, and that means that my position size is 0.27, which is here. So my lot size is 0.27. So all those calculations mean is that overall I'm going to be risking £100 on this trade roughly. And I can see when if you hover over in MetaTrader, at least when you hover over the stop loss, you can see that it comes up with the profit target there. So it's stop loss amount that I'll be losing. So it's £100 and 63 pence. And when you drag it as well, if you look to the left, you'll see the amount. You see that as I move this up and down. So it's 149.60 GBP. Move it down here. It's 69.17. Too much, but I'm going to put it back to where it was there. So that means if I do get stopped out on this, I'll be losing £100 and 63 pence. So yeah, that's this trade. I'm gonna see how this plays out. Like I said, the main thing that I want to see in the coming hours is for the price to break these previous higher lows here on the hourly, so to break this support area. If it doesn't do that and starts to make higher highs, higher lows, I may consider moving to break even, but my position on this is dictated on firstly how this pans out, if I'm awake when if I need to manage this, and secondly it fulfilling what I need to do in terms of it making lower lows and lower highs to move towards my profit target. I mean, just a point as well on when to take trades. Some people will trade to certain times a day, and it really does depend on your strategy. If you're a longer term type investor taking longer term positions, then really the time of the day isn't that imperative. If you're a day trader or a swing trader then definitely the time of day that you're trading is going to be, it's going to have more of an impact on how you trade. Certainly, there are different characteristics at different times in the day. So the Asian session typically can be a bit more quiet. Definitely from the close of market into the Asian session is the quietest time. I mean, you can even see that in the charts. If you look at the hourly, I can tell these, where we've got these really small candles here or here, these are going to be when the market's just opened or just started for the new day into the Asian session. When we see these bigger spikes here, these are typically in the European or the US sessions. You can see the times here at the bottom. All right, so the market does get more volatile. There's bigger movements. So knowing the characteristics of how the market reacts at certain times through the day can have an impact on how successful your trading is, depending on how far your profit targets are, how far your stop losses are. I'm comfortable trading just when I see the setups, so that might be in the morning, in the evening, or late at night. But when testing a strategy, definitely bear that in mind. If you've had success with something maybe that you've back tested, or you haven't traded in the live market, you need to just consider how viable will it be for you to trade that. Obviously, if it's something that is completely automated, then that's not so much of an issue. You can just set stop losses and limit orders to enter and exit the trade automatically. But if you do discretionary trading, like I'm doing here, then it may be the case that the trades that you've seen appear or included in your back testing aren't really ones that you can trade live. So bear that in mind when you're back testing stuff. Just be mindful of how realistically you can trade them. That's why I think it is very useful if you're demo trading, because you are trading a live market, and the conditions that you have in the demo account are going to be similar to what you would have in a live market. Whereas if you're just back testing on some of the software that you can just run the market pass through, there is software that you can do that. It's great. It's just another skill that you're developing there. It's great to see hours and days and months worth of data in a flash and to test it that way and to practice that way. But it's just not the same as trading a live market, which is how demo trading can differ from just standard back testing. But yeah, that's the trade for today. We'll see how that plays out. It is a Monday, which is useful, so there is room to maneuver around this if it does go adversely against me. I've got until at least Friday, so I'm comfortable with this trade. If it does stop me out the £100, fine. I've done my research here to be as confident as I can in the position I've taken. So there wasn't much else that I saw in the market in terms of tradability. There was Bitcoin. I got the chart up now for Bitcoin. I did mention this on Friday. I don't trade Bitcoin personally, but a chart is a chart. There is, as long as there's enough volatility in the market, as long as there's enough price history for me to determine the price action, because the way that I trade is solely based on technical analysis. It's solely based on price action. So it stands to reason that there needs to be enough history in the financial instrument that I'm looking at for there to be information to trade off. Bitcoin does have that now. So if in case you do trade it, this is something that you can bear in mind. I did mention on the Friday what I was looking at on this was for the price to break through these areas here, this resistance, which was quite strong on a daily. And you can see from the open just a few hours ago, it has gapped up. It's gapped over that, which is a good sign in terms of the bullishness. But the problem is it's a bit too overbought at the moment to consider going long on this. What I would want to see is a bit more value for money, and that would mean for the price to come back. So if we use the hourly in this, so in today's session, if we see the price pull back to either this average here, the moving not the moving average, just the standard deviation average here, and see some sort of a reversal candle, or candles bottoming out around here, which in fact would also be a support area, right? Because it's come down, it's hit it here. So if we've seen the price come down, interact either here, this support here, or off of the average here, or powers down lower to the lower edge, and we start to see reversal candles off of there, then as the price moves past the high of those reversals, that would be you know, an entry that if I traded this, that would be a consideration for an entry. But yeah, just basically definitely bullish on this, on Bitcoin, but would need to see some value for money, so it's to pull back and then show signs of going higher again. Okay, so that's it for today's session. As always, all the links for all the trades that I take in these videos are available in the description below. And certainly if you have any questions, feel free to ask me in the comments below, and do like and subscribe for more videos just like this. And I'll see you tomorrow in Tuesday's session. Until then, goodbye.